So first things first, we're using ICT concepts, and always make sure your chart is set to New York. Reason being, all ICT concepts work with New York time. Secondly, what you want to do, you want to add a line at 12 midnight and 7 a.m. What's that going to do for you? It's going to make sure that you have the London session on your left hand side of 7 a.m. Once you have that, you want to highlight your London session high and London session low. Once you've highlighted that, you want to highlight any fair value gaps that stick out from, obviously, on your left hand side. This doesn't only apply to the London session. I don't think I've said that before, but common sense. Anything on the left hand side where you see a fair value gap, a high that's just like, relatively equal, or a breaker on your left hand side that hasn't been used or reclaimed in any way. Once you've got that going for you, wait for 7 a.m. because the setups that you are looking for will appear between 7 and 11. And how are you going to find your setups? Well, relatively easy. You always want to look at the last liquidity point that has been swept. And what do I mean by that? Which did it recently sweep a previous high or a previous low? If it swept a previous high in the London session or the day before, for example, but in this case, the London session, we swept a previous high, previous day high, and then we started to break down. So what does that tell you? Price is looking for liquidity on the sell side. So you want to find the low, the previous low of that day, or the London session previous low. But in this case here, you want to be looking for a low. So price is broken down because why? Liquidity has been swept on the upside, and we created a breaker, and price then broke down throughout the London session. So that makes it pretty easy for you to kind of form your bias. And then once that happens, in your New York session, all you're going to be looking for between 7 and 11 is a bearish breaker. Why are you looking for a bearish breaker? Because price has shown you that it wants to be bearish. It swept a high and then created a bearish breaker, breaking down to the downside. Simple as that. Once you have that narrative, between 7 and 11, you are looking for a setup. So few entries here that you could have had. Number one, price makes its way. So right here was the London session low, and we broke down that London session low. We didn't create a move like this here, a move that looks something like this, for example, showing us that we want to go back to the upside. No, we broke straight down. We broke straight down here, and then immediately after doing that, what does this become? This becomes an order block right there, a bearish order block. So in price, so then you would want to anticipate something like this. At a point where you are anticipating lower prices, you want to see price come up there and create some form of bearish PD array. In this case, a bearish breaker. Voila, we have that. And then you enter on what? The break. Taking out the wrong. You enter on the break. I'm just gonna remove this now. Enter on the break. Where's your stop? On the higher high of that move. What are you aiming for? The low. Never be greedy, because, and I've said this multiple times before, you'd never want to be greedy. Never try and aim for anything that's just, ridiculous, because this is practically a scalping strategy, pretty much a day trading strategy. My bad, my mouth. And yeah. So then, where were you gonna put your stop? So entry right there. And what I do when price passes my entry, I add another smaller move. My big move is always first. Big move always first. Always want to add your big move first, or break up your moves, like small one, and then if it goes a little bit higher, I add something slightly bigger, because why? My stop is closer. But right here, you want to add your biggest move. That's what I usually do. And then add something small, depending on what my risk to reward ratio is. And as you see, price broke down, hit our TP perfectly. And this is why I'm always saying don't be greedy. Always go for low hanging fruit. You know, that's something that I learned the hard way, even though ICT says it all the time. Like, always go for low hanging fruit. But then, you know, you gotta live and learn. Once it hit my TP, I'm done. I'm done trading. You know, go to the sidelines. Learn to take your wins and go to the sidelines. Wait for the next day. Especially if, you know, I was in this trade here. I came down. And if you watched my video yesterday, I said that before we attack these highs, we might come back and hit here. But we didn't do that. Price just went straight up. But see, when price was coming back down and making its way back down, it started there, used that to go up, and use this here to start going back down lower, you know. So the same way that you'd anticipate price to swing higher is the same way that you'd anticipate take profit zones and all those type of things. I've explained this again. So yeah, so right now, what would I want to see right there? Well, price has swept the lower side, but at the same time, it is also Friday. So it's either we do continue, most likely, either we do continue going down to attacking more sell side because it is Friday, or price tries and attacks these highs here. But it all depends on what we create here. If we create something like, you know, some kind of support so that we can go higher, then yeah. But if we don't, then you don't have a trade. That's how this usually works. But because of these lows and how we swept this low here, I'd expect these lows to be swept accordingly. And what do I mean by that? I want the bodies of the candles to be underneath here before we break up to the upside. But you know, this is how literally I go through the motions, and that's how you trade. You need to anticipate. I'm always saying this: anticipate, anticipate, anticipate. But yeah, so yeah, that was the entry. There was another second entry right there. I digress, my mind is everywhere. There was another entry right there. When price does this, what does that mean? You add another move. So first move, price retraces here, breaks down, creates another bearish breaker, add another move, put your stop right there, aim for that low, boom. Or as it dug deeper, if you add all your moves there, even better for you. But that's how we are using the bearish breakers, and sweet.